Hello everybody and welcome to the first video of the annual accounts lecture. At the beginning I start with the components of annual accounts. The number of components depends on the legal type of the company. Here you can see the annual accounts components of an entrepreneurship or partnership according to paragraph 242 3 HGB, the balance sheet and the profit and loss account. Now we will have a closer look on corporations which are not capital market orientated. The annual account of a not capital market orientated corporation consists due to paragraph 264(1) sentence 1 HGB of a balance sheet, a profit and loss account and the appendix. In addition, a position report must be prepared. Capital market orientated corporations have to create their annual accounts with the highest number of components. Capital market orientated corporations that are not required to prepare group accounts must, in accordance with paragraph 264(1) sentence 2 HGB, extend its annual statement by a cash flow statement and a statement of changes in equity. These companies have the option to add a segment report. Paragraph 266 HGB provides a detailed structure of the commercial balance. The asset side should be divided into fixed assets and current assets. Fixed assets include assets that serve the long-term operations, while current assets include items that serve the company only at short term. The liability side is divided into equity, accruals and liabilities. Now let's have a look at the structure of a profit and loss account. The structural scheme of a profit and loss account is provided by paragraph 275 HGB. The profit and loss account can either prepared according to the total expenditure format due to paragraph 275 2 HGB or according to the cost of sales format, paragraph 275 3 HGB. Now we take a closer look at the different methods for preparing the profit and loss account. We are starting with the total expenditure format due to paragraph 275 2 HGB. The starting point are the sales. The sales minus or plus the changes in finished goods and work in progress and the own work capitalized were summarized in the first sum position, the total output. The total output plus the other operating income and minus the costs of materials were summarized in the second sum position, the gross profit. The gross profit minus the personnel expenses, depreciation and amortization and other operating expenses result in the operating profit. The operating profit is the balance from step 1 to 8. The income from participation, other investments and long-term loans, interests and similar income and minus the depreciations on financial assets and short-term investments or interests and similar expenses were summarized in the financial result. The other operating income as a result of the first 8 positions and the financial result as a result of the positions 9 to 13 were summarized in the annual result before taxes. This result minus the taxes, in this case taxes on income and other taxes, is the net income or the net loss of the year. As you can see in this method, the operating income and the financial income were separated. The profit and loss reader can see at a glance the profitability of the core business. The cost of sales format has similarities to the total expenditure format, but let's have a closer look. The sales are the starting point. Minus the cost of sales result in the gross profit on sales. The next step is the deduction of the selling expenses, general administration expenses, and the other operating result. This amount equals the operating profit. The steps 8 to 12, the determination of the financial result, is similar to the total expenditure format. The step 1 to 12 are summarized in the annual result before taxes. The annual result before taxes minus the taxes results in the net income or the net loss. After looking at the profit and loss account, we want to focus on the cash flow statement. The cash flow statement provides a detailed insight into the liquidity situation of a company. It offers the advantage of time-related cash flows compared to statically calculated levels of liquidity at a certain time. A cash flow statement includes only cash flows. By comparing the inflows and outflows, a cash surplus or shortfall result arithmetically. From a business point of view, it makes sense to systematize the cash flows. The balance sheet reader of the annual statement should be able to obtain information about the cash flow of the following areas: cash flows from operating activities, cash flow from investing activities, and cash flow from financing activities. The HGB does not provide a regulation for the structure and composition of the cash flow statement. The cash flow statement of a group accounts must be prepared in accordance with DRS 21. When voluntarily preparing a cash flow statement, DRS 21 is recommended. DRS means the German accounting standard issued by the German Accounting Standards Committee. After we have familiarized ourselves with the methods of the profit and loss statement and the cash flow statement, we take a closer look at the purpose of the commercial annual statement. The objective of a commercial balance is in particular to present the net assets, financial position, and the profit situation of the company economically. On this basis, the commercial statement fulfills the following purposes in practice. At first, the information about the net assets, financial position, and profit situation, in particular for the investors and creditors of the company. Second, the basis for the dividend distribution of corporations. And third, the basis for the preparation of the tax financial statements. The tax financial statement, especially the tax balance sheet result, forms the basis for the profit tax, the income tax, corporation tax, and the trade tax. The tax regulations of a country depend on the economic objective of the country.